price of Bitcoin just fell from $42,000 per Bitcoin to $25,000, which is a price we haven't seen it at since December 2020. And I believe there are two main reasons for this. I want to explain these two reasons to you so that you can determine for yourself whether this is just a temporary slip in the value of Bitcoin and it's still on its way to $1 million per coin, or whether this is true value loss. If that sounds good to you, let's get into it. Now, the first reason that Bitcoin is down is because the stock market is down. That might not surprise you, but it's actually a very debated topic because most people want Bitcoin to be segregated from the stock market. They want to be seen as different asset classes. However, arcane research found that the NASDAQ and cryptocurrencies in general have a 0.82 correlation. A correlation of 1 would mean that every time there's a 1% increase in the stock market, there would be a 1% increase in Bitcoin. A correlation of 0.82 means that every time the stock market goes up 1%, Bitcoin will go up about 0.82%. And this just pushes the question one step further. Why is the stock market going down? When the government infuses money into the economy, prices will go up. This is actually one of the economic principles of Ray Dalio, which he described in The Changing World Order, one of his YouTube videos that I highly recommend everybody go watch. It really helps you understand the dynamics between macroeconomic factors and the economy in general. So as money goes into the economy and prices go up, interest rates need to be raised by the Federal Reserve, which is exactly what we've been seeing. Inflation just hit 8.5% for the last 12 months, and interest rates are climbing quicker than they've ever climbed in order to offset that inflation. However, when interest rates increase, the valuation of companies decrease. And since companies are what make up the S&P 500 or the stock market, when companies' prices fall, the value of the stock market falls. This is what then leads to Bitcoin falling. So at a very high level, that's reason number one. However, the second reason, and the more likely one that explains the rapid drop that we've seen in the last month, is the relationship between Tether and Luna. Tether and Luna are altcoins. These are cryptocurrencies that are not of the major brand like Bitcoin and Ethereum. Tether and Luna in particular are what we call an algorithmic stablecoin. This means that they were made together in order to create some stability in the crypto market. Now, the Terra Luna project was pegged to Bitcoin, and the idea was that Terra would always be worth $1. And the other side of this was that you would always be able to trade 1 Luna for 1 Terra and 1 Terra for 1 Luna. What this means is that if Luna increased in value from $1 to $1.20, you could theoretically go in and buy a lot of Terra and immediately make a 20% return by converting it to Luna. And of course you could do this the other way if Terra increased in value above $1. This algorithmic balance or stability between the coins was meant to keep them pegged at $1 each. However, wouldn't you know it, someone found a way to fraudulently obscure this Luna-Tether relationship. Now, the Tether-Luna relationship works so long as people capitalize on the arbitrage opportunities. However, if Luna falls below $1 and people don't capitalize on the arbitrage opportunity that would bring it back up to $1, we fall into what's known as the death spiral. And this is where each of Luna and Terra continuously fall and fall and fall until they've lost all of their value. This is precisely what happened last week. An analysis by On-Chain Wizard found that an attacker or a hacker found a way to manipulate the Terra Luna relationship. Specifically, this attack involved someone buying $350 million worth of UST. This completely drained the liquidity pool and led to immense panic throughout the markets. This hacker then spent another $650 million offloading his position on Binance.com, which led to the depegging of US Terra and Luna from the US dollar. Now, in order to keep some sort of stability between Terra Luna and for people to cover their positions, Bitcoin began to sell off. And the more people sold, the lower the price of Bitcoin went until eventually it hit 25,000 before briefly rebounding to 29,000, which is where it's sitting right now. Now, the crypto space is full of exciting future applications, such as fee-free international transfers, enhanced security, quicker transfers amongst bank accounts, and DeFi, or decentralized finance, which essentially means that there is not one central body governing the flow of finances in a space, such as our Federal Reserve. However, the one thing that cryptocurrency is currently not is stable. So these algorithmic stablecoins that attempt to bring stability into the market are attempting to do something that is not naturally there yet. Stability will enter enter the crypto market as people enter the crypto market. One study found that 89% of Americans have heard of Bitcoin, meaning 11% still don't even know what it is. In fact, only 22% of Americans even invest in Bitcoin, meaning there is a long runway of growth that will eventually bring stability to the market as more people enter it and the coins become more stable. However, forcing Bitcoin to be something that it is not is only going to lead to future catastrophes like this. That's all I've got for you guys. If you enjoyed the content, please like and subscribe. Otherwise, have a great day.